Oh, it's on. This is Brian Lewis with MMT Investing, and things just changed. So, we're looking at a little pre-market activity today, and this is super interesting. We have established this angled trend line on the outside that we are running into, and it looks like we have three solid reactions off of this. We've reversed off outside of the consolidation zone. And here is what we are going to be looking for in the next day or two. So right now, we have this pattern where we bounce across to a corner, break the trend line, and then you go up and back test the trend line and come down. So on the shorter timeline, we get this pattern, and then we even get it on the shorter timeline here where we cross over, break the trend line, bounce. So we want to do the same thing on our main timeline right here, which would be we want to try to find the top edge of the consolidation zone. Then we want to break this line. Then we want to come up and back test this line, and then cross back down to the next consolidation zone. And that would set up an area off the corners where we would be consolidating like this. And like this. So if this pattern that we've seen so far in this cycle repeats again, which is highly likely, that'll be a crossover, which is this bull trap crossover, break the trend line, and then back test it. So crossover, break the trend line, back test it, and then we come down into the consolidation zone where we would start attacking the wrong side of the consolidation zone, consolidate, then you get some wild swings, and then you reverse out into the new market condition. And right around here is where we would switch from a 3-month credit contraction cycle, which is down, bounce, bounce, is the general moves that you see in a credit contraction down cycle. But we have way more precise estimate on what those bounces are going to look like now that we have this pattern established. And I wanted to switch over here. Let's come out to smash that like button right now to help me out with the YouTube algorithm. Okay, so if we come out to the whatever this view is, a year, then let's have a look at the MACD. So let me zoom in a little closer on this guy. So you can see coming down here on the MACD, we came down to a clean point at the bottom of the MACD, down from the top, and that is setting up our credit contraction cycle. And then in this middle part of the cycle, what happens is you get a max divergence on the MACD, which happened all the way back here. So this was the top of the divergence, but we managed to get up to a higher high here, which is impressive. And then you saw the action along this line. But once the MACD turns over, it's usually pretty aggressive. It'll come down. So the MACD in the middle of the cycle is going to come down to a point and bounce out. And it'll generally will cross the other moving average line here. So let me draw that where it would actually happen though, because this MACD line would line up with the bottom here. So for instance, it would come down and bounce right there where this thing is, and then reverse out, and then this divergence line would be crossed, and then it would diverge again. So you can see here that we got our max divergence already on the MACD, and it is already turning over. So you can think of this like acceleration. Like at this point, we started getting acceleration or like gravity to the downward direction. So the speed was still up, but now it's just going to pull it down until we bounce and we can get a positive acceleration going, pushing it back up into this area. So the MACD is a huge signal that we're going to make a pretty serious down move to a bounce. But this is the pattern that we've seen here, is try to kind of establish the upper edge of this consolidation zone, and then you come through and start finding the consolidation area, and then you would get down to your actual consolidation point. And then I wanted to talk about the trend lines a little bit. People have been asking me about the trend lines, and you can see this is the Volmageddon crash here. So you can see that this top trend line comes to the consolidation area on Volmageddon, and then this second one is the financial crisis trend line, and it goes back, let me go out to like the all-time. So you can see the financial crisis trend line goes to here at the bottom of the financial crisis. So we have the Volmageddon line just for the blow off top bull market here that comes from the dead cat bounce down to the consolidation area on Volmageddon. And then we have the financial crisis trend line that is our run off of the financial crisis bottom to the consolidation point here. And that's our main bull market trend line, but we've established another trend line now that we have another bottom, which is a lower trend line, and it runs back this direction along a longer term trend line. It's like a 40-year longer term bull market trend line that goes back to the bottom of 1982, which is the Volcker bottom. That's the last time we mean reverted to the bottom of the stock market price, like an inflation adjusted bottom on the stock market. So where we are right now in our charts, let me go back to the view where we can get all the wiggly action. Where we are right now is, so you notice that we bounced off the top of Volmageddon up here to this edge trend line. Then we came down and we bounced off the top of the financial crisis to the corner of the Volmageddon trend line and this higher level trend line. And now we've come down and we bounced off the Volcker bottom to the financial crisis at this higher level trend line here. So this is a huge repeated pattern that we're getting, and it suggests that we are going to get that same pattern again, the same type of pattern that we got on the way down here, where you can see here that we were testing against this consolidation zone, and then we broke the trend line and bounced. So we're looking for the same thing here. Test the consolidation zone, break the trend line, bounce. And that's the basic movements that we're looking for. And then of course it could be higher, it could be lower, it could be a little earlier. We don't know exactly where this consolidation zone is. We don't know the prices or the dates quite yet, but we should be seeing in the next 2 days of trading some action against a different line here. So you can see right now that we're still getting action along this higher level trend line here. So what we need to do right now is get unstuck from this higher level trend line and come down. And then we need to start discovering the edge of this trend line. That's what we're looking at for the next 2 days, is get unstuck and start finding the consolidation zone. And then also, if you go out onto a higher level graph here, we do actually have a larger scale pattern already set up, which could happen, maybe, and that is this higher level trend line that we just set up off the edge of this bull trap corner sets up another longer term bull trap. That's like a 3-month kind of bull trap. Once we reverse into positive market conditions, we have like this 3-month trap over here to this corner. And then that would set up a longer term bear market here. So this is a possible thing that could happen longer term. But right now, this is a high probability thing that could happen right now. So if you go back to the Volmageddon as an example, if we can get it, yeah, let's go take a look at Volmageddon. And so you can see that Volmageddon here is squished down, and that's because Volmageddon happened during a bull market, and the crash that we have right now is stretched out because it is happening in a bear market. But let me just stretch this out enough to take a look at it. So you can see here in Volmageddon also we had a 3-month cycle, 1, 2, 3, which has the same general shape where you come down, you bounce, and it went down. And this area really happened after the consolidation. You can see the trend line here is through the consolidation area at the end of the 3 months. But this had a more normal pattern where the dead cats and the bull traps, all the crossover kind of movements were normal length and they're kind of in the middle. We're getting more exaggerated shapes in our current cycle. But in this cycle, this is 3 months here, and at the bottom of the 3 months, we reversed out into the bull market here. So this is a 3-month bottom. And then if we come back over to our crash here in the bear market, this here is the 3-month bottom. So in the case of Volmageddon, we just got out of here and went back to higher highs. So this is our last trend line, and the action that happens once we break under the trend line is a little bit harder to predict because we're just kind of off into who knows where territory. But this type of movement I think is the most likely because we're just switching into a bear market kind of expansion, and that's what it'll do. It'll just kind of go up a little bit. So that's a longer term outlook. And yeah, just right now, we're just trying to get into this consolidation zone now. We're trying to get off of this side wall that we've been grinding and running into over the last day and a half, 2 days. And then we want to come down here into this consolidation zone. So that is the outlook. And I am 100% short in my speculative account, mostly short on tech, a little bit oil. And I am just looking for this. And there should be actually also like a little dead cat bounce in here somewhere that kind of gets back up to the line also. So it'll be like a couple tests and then like a dead cat. And then we come down. So those are the movements we're looking for. And then this is a major trend line. We'll see if we can break through this line, and if we do, then we should be jumping up to back test it shortly thereafter. So that is what is happening. This is not trading advice. This is just a model. It's sort of a mathematical style model with tangent lines that's tracking this credit contraction cycle. So these precise cycle movements, if you'll notice, have happened just like this the whole time that the Fed has been trying to intervene and pump money, and it hasn't changed this pattern. This pattern's happening regardless of the health situation. It's happening regardless of even of the Fed intervening. So this is a mathematical credit contraction. This cycle has to do with the amount of loans that are available, and that's the main driver of this shape. And we are in a 3-month credit contraction cycle in the world monetary system, and that is what this crash is all about. And the other stuff that people keep saying is not affecting these shapes because they are mathematically happening regardless of what everyone is saying. So I think it's very interesting, and we'll see very shortly what we get here. Should be interesting. So I hope that was helpful. Please hit the like button. Not trading advice, and happy trading.